Welcome back to Be Rich. Someone in one of those columns asked me about cryptocurrencies. Why should we not buy cryptocurrencies? Or what do I think of cryptocurrencies? Well, cryptocurrencies is another Ponzi scheme. Once in a while, every 100 years or every 50 years, the entire world is caught up in a big frenzy, which ends up in bad taste for everybody, where the retail investor and the institutional investors get caught in the fancy and lose a lot of money. It started with the tulip mania. There was an English South Sea bubble. There was the Mississippi bubble. There was the great stock bubble in 1929. There was the great Nasdaq bubble, and there was the Japanese bubble before that. These are bubbles of epic proportions. We have not had a bubble since 2008 of such big proportions. The Bitcoin is one such scheme. Always understand, if you want to invest money in something, it must have some intrinsic value. Bitcoins have no intrinsic value. This is a product of some clever computer software which says that we will release it in small stages, and as you go along, bitcoins will get rarer to find, so people can trade with each other and make money of it. The belief is there's a fool who is going to pay a greater price than you, and therefore you can keep buying. The con game in this is they say Bitcoin is a currency. Nothing can be more stupid than that, because currency has two functions. It has to be a storehouse of value. That means the value has to be constant and stable over a long period of time, and two, it should also be a medium of exchange. In Bitcoins have gone up so rapidly in price, they cannot be a medium of exchange anymore. Nobody wants to exchange their Bitcoins for goods or services anymore. Therefore, it will not fulfill one of the functions of currency. Therefore, it becomes a storehouse of value or an asset. For Bitcoins to be an asset, it has to have some economic value. That means it has to generate some cash flow. Bitcoins do not generate any cash flow. You are simply keeping it and storing it in your computer hard disk or in a cloud. There is no generation of wealth or economic value from owning a Bitcoin. Then some people will ask, then gold is also a poor investment. Gold is a good investment for two reasons in developing countries like India and Africa and other places. That's where most of the gold is consumed. People inherently don't trust their currency. Gold acts as a proxy for the Indian rupee. The poor do not have any access to assets, financial assets, and they cannot store the value carefully. And for a long period of time, real consumer price inflation in countries like India has been very high. So they need a proper storehouse of value. The other main advantage of gold is not manufactured by man, whereas Bitcoins is manufactured by man. If the computer programmer who created Bitcoin wants to make money, he can tweak his computer software to create billions of Bitcoin, and people who have already bought Bitcoins are going to lose a lot of money. Whereas gold has to be mined from the earth. There is no artificial gold. Bitcoin is the nearest artificial gold. As I was saying, Bitcoin is a human creation, and all human creations are fallible. A day will come sooner or later when people get greedy and there will be too many Bitcoins, and the value of Bitcoin will be completely eroded. If you like this video, kindly subscribe it and ask your friends and relatives to do the same. Knock on the bell notification so that you get notified every time a video is put up. You may write your comments on the comments section. There is also an email provided for you in which you can ask your queries. This video was the result of one such query. Thank you very much.